Well, oil prices surge and stocks recover amid those continued tensions in the Gulf. And for more on that and his investment ideas, joining us now is Darren Dansereau, CEO of QV Investors. It's good to have you join us. Thanks so much for your time.
Thanks for having me, Lindsay.
What do you make of what we've been seeing in terms of market reaction to the conflict in the Middle East, and how should investors read what's going on? Should people just kind of wait in the sidelines to let the dust settle?
Well, I think there's a number of things that are going on. What typically happens, as was talked about earlier in Larry's show, just talking about how it was anticipated that this may happen with warships entering the region. And now we're actually seeing, unfortunately, an attack on the, when I say unfortunately, because of the lost lives. I think what we're seeing is impacts within the market, oil prices going up, gold prices going up. So it really depends on, I think if somebody's looking longer term, there may be opportunities here in certain areas. I think the biggest thing, we have what's going on in the Middle East, but we still have what's been really happening within artificial intelligence and some of the negativity around some of the companies that have been anticipated to be impacted by what's happening, but maybe there's some opportunities.
Okay, so we'll talk about maybe some of those opportunities in a moment in your stock picks, but I want to move on to some of the volatility that we're seeing as we head further into 2026. Obviously, tariffs have already been a major cause of that volatility. Geopolitical tensions could be another one. What else are you kind of watching for this year that you feel could cause more waves?
Well, I think the one thing that, as we're seeing oil prices surge, there could be more inflation coming into the market. That may have an impact. It's been talked about the K economy. Those individuals that are at the lower end of the income spectrum may have more pressure put on them by oil prices moving up, which could impact some of the consumer discretionary companies. And if we do see higher inflation going up, we could see interest rates move positively, moving up in a positive direction, which may result in impacts on bonds, obviously, but also on mortgage rates, which could impact what we see in the housing sector.
What about the cost and returns from AI spending? That's another thing I know a lot of investors are watching for. We've been seeing a lot of tech stocks and software stocks going up and down since the beginning of this year. What do you make of what we've been seeing there?
Well, I think what everybody's trying to figure out is what sort of return on investment these companies are going to get from the spending that they've been doing. I think for us, what we see is that there may be opportunity longer term in some of these companies if they do see the return, but we see the bigger opportunity being in those companies that have been negatively impacted in terms of their share price, but maybe not necessarily negatively impacted in terms of what their business might look going forward. Examples being companies like Descartes, CGI Group, or Constellation Software.
Yeah, we've seen a lot of that lately, right? Like, for example, companies reporting pretty strong earnings and their stock price going down. So I want to get to your stock pick still, but just first, is that your strategy right now when it comes to investing, is kind of buying on the dip?
Well, for QV, we are long-term investors focused on those companies. The Q&V stands for quality and value. So what we're trying to do is look at what may be short-term blips or downdrafts in the stock prices, and then using that as an opportunity to look for long-term companies that we think we can invest in that will see a return. And I think for us, when you're seeing companies, oil prices moving up substantially, I think that may be the opportunity looking at, I think people are sitting on their hands wondering, is the oil price going to go up to $100? I think the biggest thing is going to be, is this going to be a short term, a few days, or is this going to be much longer? And I think when you ask that people should be sitting on the sidelines, I think it's really an investor needs to figure out, what they may anticipate is going to happen. That's not something that we try to do, is say, well, the oil price is going to be this or that going forward. It's more what is being priced into the particular companies. And I think valuations on the energy side has been a bit pricey in terms of our mind. And so it's other sectors where we're seeing better opportunities.
Okay, your stock picks. The first is CGI Group. It's lost about 20% so far this year. What value do you see in this company moving forward?
Well, I think the biggest thing for us is this is a company we've owned for a long time. What we've seen as a management team that's very focused on providing excess cash flows and deploying that towards opportunities in terms of acquisitions. And so there is opportunity out there. Not only is CGI down, but many of the targets that they'd be looking at, whether it's public companies or even the private market, there could be opportunities for acquisition. We've seen the company take advantage of this low stock price and buying their own stock. They, in the most previous quarter, spent almost $600 million buying their stock. And when we take a look at the valuation, sitting at 18 times forward PE, that's what their average is over the last 10 years, and they've actually been lower than that. So what we're seeing here is an opportunity to look at a high quality business, and there's been opportunities in the past with CGI seeing negativity around the stock price, allowing long-term investors like us to move in and take this short-term opportunity to buy a company that we think will be quite strong going forward. And as an example, if we look at their book to bill most recently for the last year, 110%. So they actually are increasing their bookings relative to what they have billed for the previous 12 months.
Okay, we'll have to be very quick with this last one. Just in the last 30 seconds, I apologize. Can you explain TFI International and why you like this company?
So for TFI, what we're seeing is we've seen a recession in transportation over the last number of years. This is a company that also has been acquisitive. They bought Daseke in the last few years. What we've seen in 2022 is the peak earnings was $8 in TFI. We think it could easily get back to $8 US and above that with this acquisition and a couple other smaller ones that they have made. P is about 15 times based on that $8, and we think that valuation is lower if you look at some of the opportunities they have in reducing their costs and adding on this additional revenue. So I think it's an attractive area that hasn't seen a lot of, I mean, it's moved up, but it's been under a lot of pressure.
Okay, we'll leave it there. Darren Dansereau, CEO of QV Investors. Appreciate your time. Thanks so much for joining us.
Thanks, Lindsay.